What if I told you there is a setup that literally happens every single day and 99% of traders ignore it? No indicators, no news, no casing, just one stupid simple button using lit plus smart money concepts plus the Asian range. I am going to prove it to you. Watch how I caught 5 hours before breakfast using this exact daily setup. We will adopt these clear and effective rules to effortlessly scalp the 1 minute time frame each day. I will show you how to consistently seize trading opportunities and provide guidance on minimizing unnecessary losses. Stay engaged as we strive for success together. First, we will identify the Asian high and low as well as the 50% mark between the two. Second, we will utilize changes of character, break of structure, and supply and demand analysis to make our trade entries. Third, we will track highs and lows to accurately pinpoint the right supply and demand zones as well as break of structures. Let's approach this with confidence and purpose. First thing we will do is mark Asian high and Asian low like this. I use a Fibonacci. As you can see, this is the 50% of the Asian high and low. What we are waiting for is liquidity sweep. As you can see, price swept the Asian high. Now we go to 1 minute. We will follow the price like this. Mark the low, the high, low, and lower high like this. Now keep in mind there is this low and then this low. You can see also this high. This high hasn't broken anything, so this low becomes invalid. So the move started from this low, then higher high. This high broke this structure, then went lower high. This is the valid low, not this high or this low. Let's wait for a change of character. We have our first change of character over here. As you can see, this is the low, this is the high, and this is the lower high and the lower low, which means this point of interest is a valid supply zone that we can enter. Now you can set stop loss at 1.5 bips or 2 bips because this is a scalping strategy. Let's set it for 1.5. What I also should mention is that if in case price takes liquidity just like this, then before you get a trade touches the 50% of the Asian high and low, then the setup or trade idea becomes invalid. Just because for our first target would be this low, this lower high. Our second target would be this 50% of Asian high and low. Our last target is the Asian low because Asian low is also a liquidity. But sometimes price takes liquidity. For example, the Asian high, then comes back, something like this, then goes higher. The only reason that this trade failed or this example I'm showing you is because the price already touched the 50%, which means there is a high probability that price will continue up. So you need to be careful with this one. Now, how can you get the maximum profit that you want? It's simple. If you want to scalp, get out early, you can target this low. As you can see, you can get 1 to 3 or hold until this low, take partials. Let's say you take the first partial over here, then take another partial after price touches the 50%. Your TP would be at the Asian low. That's a good risk management. For us, let's just target the 50% for now. Now we broke structure as you can see. Yes, you could have entered this one also as you can see. Something like this, but it is always recommended to enter on the extreme. As you can see, this became a liquidity to mitigate the extreme supply. Anyways, we would partial at this low, then let the rest run. As you can see, it even hit the Asian low. However, a 1 to 3 risk to reward ratio significantly increases the likelihood of hitting the take profit target more than the 50%. In addition, targeting a 50% offers a greater probability of achieving take profit compared to utilizing Asian low or high as levels as a target. On next day, we will do the same thing, mark the high and the low and the 50% of the two. We will go to 1 minute, follow the price action. As you can see, we have high and low. Maybe a change of character of this low. We have another high, that means this low is valid. This is another valid low. We have break of structure, always take the extreme. As you can see, we will set limit order here. Take profit either the recent low or 1 to 3. You can even go to 50% if you like. In case this happens, this is what I see: high, low, higher high, lower low, lower high, lower low. A valid pullback must have at least more than 2 candles to consider it a valid pullback or retracement. As you can see here, we have lower low, we have more than 2 candles retracement. So this is a valid pullback. Now we can just mark the supply zone just like this. You would ask why I mark this green candle instead of the recent candle. Simply because I am considering the liquidity above this zone, as you can see, right? So there is high probability price will come back, go higher than this candle around here, not break, maybe not break this high, then go down. If you set limit order like this without covering the high, like this, you definitely lose. You will choke your stop loss. The trade goes your way, but you still lost. So it's better to take the last green candle before the bearish move. We can target the recent low like this, which you will get at least 1 to 2, or target the low, I mean the 50% of the Asian high and low. Now you have a break of structure. You can either re-enter again, but just to be safe, trade only 1 trade a day. Break even, then let the rest run. As you can see, as simple as that, this stupid simple scalping strategy works every time, and you get huge RRs like this, and you only trade 2 hours a day. Try it and comment down below, like this video. And if you are tired of overcomplicating trading, chasing new indicators every month and still ending up with the same result, maybe it's time to do it differently, because this isn't about luck, it's about finally seeing the market for what it is. If you are ready to break the cycle, message me. I'll show you how I trade mechanically every day, step by step.